Yo.
Hello traders and welcome back to my YouTube channel. In today's video, I'm going to be bringing you along on a trading week, showing you a live trade that was taken, me passing a funded account, and also showing you around the office building. If you're not already subscribed to the channel, make sure you do so and make sure to leave a like and a comment. Let me know your thoughts in the comment section below. But for now, I hope you enjoyed the video. Let's get straight into it. Right guys, so I've just taken this position on CADJPY, as you can see there, was also sent into the team, and I'm going to break down the analysis for you now. So this is the 15-minute time frame. As you can see, price is clearly moving to the upside. It started down here with price forming this inverse head and shoulders pattern with the left shoulder over here, the right shoulder, sorry, the head down here, and then the right shoulder over here. We then broke through that level, pulled back to retest the neckline, and then ever since we've just been continuing in this bullish market structure. So I've taken a position over here. The actual analysis, if I jump down to the 5-minute time frame, you'll be able to see where we've actually just grabbed some liquidity to the downside. We've been moving towards the downside with a strong impulse move here. Okay, the strong impulse move, and then as we began to approach this level down here, you can see as price began to slow down, we tried to impulse away from it, but price needed to come down a little bit more, grab some liquidity, and that's when I took the position. We're now floating in some nice profits. The overall risk to reward ratio on this trade is going to be a 1 to 11. However, I'm going to be looking for scaling positions. As you can see, we're currently just now approaching this level of resistance here. So we might find some sellers jump into the market, but in my opinion, we're just going to break through. So what I'm actually going to be looking for is for price to just pull back slightly into this level here. And that is where I'm going to be looking to catch a scaling position to move to the upside to maximize on my profits. So stop loss is at break even, moving nicely. I'll update you guys on how the position moves later on today. Okay, so it's not long after we've entered the scaling position, as you can see here on my phone. And this is the position right here. We're currently running in some nice profits. The first initial position is running around a +5, and the scaling position is currently running around +2.5. But there's still so much potential. My stop losses have been trailed to break even just in case, because if I look at the economic calendar, we do have some PMI coming out, manufacturing, services, composite, all of these coming out today. So it's definitely going to move the market. However, I'm going to remain in the positions because I do believe we're going to continue moving to the upside, but we have to protect ourselves at all costs. But yeah, guys, once again, it's only been like 15 minutes since I've been in this trade, so not a long trade at all. After news comes out, I will also update you guys whether we get stopped out at break even or it just continues going. I will obviously update you guys then. The trade is finally over. I decided to close out just before the news because it wasn't worth risking, and I was running in really nice profits anyway. So I tend to do that depending on where I am in a trade. I'll either close, trail my stops, or just completely leave it. But in this scenario, as you can see here, if you come over to the screen, you can see we was running at around +10 on the scaling, +10 on the original trade. So overall +20 risk to reward ratio. So decided to close out. Yes, obviously price has pushed a lot further, but it could have gone either way. It could have come down, it could have gone up. There's no point in being greedy. So what I decided to do was just close the trade, bank the profit, send it into my group as well. So if you guys want to join the group, click the link in the description and I will see you inside.
No days off, no days off, no days off. It's a trader, I'd like you to meet Andrew.
Right guys, so I'm just with Ryan and we've just left the office. We're going to get some food now and then head to the gym and then head back to the apartment where we're going to be answering your guys' messages who want to join the auto trader, getting back to you, answering any questions you have and then getting you signed up. And we're also going to buy some funded accounts today. Maybe go to Funded Trader, FTMO, we'll make a decision when we get home. But when we get there, we'll bring you guys along and show you guys what we are up to. So I'm about to go live with the team to break down the trade that was taken today. But before I do that, Just want to update you guys on the auto trader that we're running that you guys can copy. This is a 400k account. Don't know if you can see the profit for today, but that is the profit today on a 400k account. We've got multiple different accounts, different deposit sizes, but always the same percentage gain. I think we're about 1% for the week, which is great. Talking about the auto trader, you can join for a minimal amount, $500, $300. You can get involved. So I'll leave the link in the description of this video again. And if you want to do it, just click the link. And yeah, I'll message you personally and get you on board.
Can turn to real estate.
Hey, it's a pleasure. Good to meet you.
And Gustavo Frank of Los Pollos Hermanos.
How many times would they say I'm the smoothest? Truth is I never not moved this way. My trench coat leather, my shoes are suede. Beg you don't step on my Pumas, babe. Walk the ages in these trainers, but I ain't quick when they losing faith. You know I've been tested with that.
Right guys, so as you saw last night, I purchased a GFT account and I'm about to close out the trades at profit target. So come in. As you can see there, I've now passed the GFT 200k account within 12 hours of having the account. And I'll update you guys with the certificate once I receive it. So just out for a walk right now in this beautiful English weather that you can see. I've never actually shown you guys the office before, Vanquish's office, where I work and where I trade from and where the business is ran. We've been here for the last 2.5 years. We haven't always been here though. So when I first started trading, when I was 17 years old, I actually started with just a desk next to my bed in my mum's house. I then moved into a spare room which was just dedicated for trading at the time. For those of you that have been following me for a while, you'd remember, I'll put a clip up so you can see. And then me and Ryan actually moved into a shed in the back of my garden where we was both trading together for a while. That's where we built up the company, that's where it started from. But now Vanquish has multiple clients, multiple partners. We thought it'd be good for us to get an office, so we've been here for the last 2 years now. And just touching on the point of your trading environment, so loads of you think that your trading environment will affect your trading. Now, I'm telling you that it doesn't. So the way I've been trading for the last 7-8 years hasn't changed, because the consistency and the profitability that you're seeking isn't in your trading environment, it's actually in your mindset. So I'll just leave you with that thought there. Right, so I'm now going to be breaking down for you guys the actual reasoning behind the trade that was taken this week on CADJPY. So great trade, plus 20 risk to reward. I'm going to talk about the analysis behind it in depth and also the reasoning behind the trade. So let's get into it. So like I said earlier, you know, the whole bullish market structure started from this inverse head and shoulders down here, with the left shoulder being over here and the right shoulder over here, and then the head down here. Now, like I say all the time, head and shoulders patterns or inverse head and shoulders, whatever it may be, it's just a fancy name for something else. It's a fancy name for what is actually going on in the market. And in this example, it's basically just telling us that price is turning from bearish market structure to bullish market structure. We then had the neckline of the inverse head and shoulders pattern. And if you remember on my last video on YouTube, we took a buy position here on CADJPY. And now we're also taking a buy position up here because of the continuation of bullish market structure. So we've just been continuing to pump to the upside. But what's very, very interesting about CADJPY is its need to grab liquidity to the downside before continuing to the upside. What I mean by that is, notice every time we form a low point within the market, price actually impulses down to grab liquidity before its then big run to the upside. Okay, and every single time we're respecting bullish market structure. For example, here we're just breaking through areas of resistance impulsively, pulling back correctively to retest it as an area of support. Then we're continuing once again to the upside. Okay, so we're just continuously forming not only bullish market structure, but bullish phases of the market. And what I mean by that is, when we want to be buying the market, we want to be seeing strong impulses to the upside, followed by bearish corrections followed by that bullish continuation. And that's exactly what happened. For example, here, where we had a strong impulse to the upside and then a bearish correction back down to the downside before that continuation. What it tells us is that when buyers are involved in the market, they're involved very heavily, very impulsively moving. And when sellers are involved in the market on the correction, they're not very active. It's very choppy, which means there's less amount of sellers than if it was in bearish market structure. So anyway, like I said, price has been needing to grab liquidity, and it's happening everywhere. For example, over here, price is forming a low point here, forming another low point, and then it has to impulse down, grab liquidity to the downside before it's then push to the upside. So I started to see a pattern with CADJPY. Okay, this doesn't happen all the time, but it's been happening recently with CADJPY. So I was looking to use that within my analysis to basically increase my probability when I was looking for these entries, because yes, history repeats itself, but not all the time, but we can definitely use it to our advantage. And that's exactly what I've done in this scenario. So anyway, exactly what happened. If I just zoom in a little bit for my actual entry, I was looking for the exact same thing. What happened was price had broken through this level of resistance and then came back to use it as a level of support, as you can see here. But notice, like I was mentioning before, look what happens every time it retests the area of resistance as support. Yes, we have that bullish impulse away, but it's not the full move. It's not the big move that we're looking for. So using that to our advantage, I was waiting for price to do something similar. And that's exactly what we done down here. We began to grab some liquidity to the downside, and I was expecting the same thing to happen. However, this is the 15-minute time frame. We're going to drop down to the lower time frames to get our precise entry. And I'll talk about exactly how I done that. So this is the 5-minute time frame. Now, this is the difference, guys, okay? Because this is where you have to be careful and where you can really get lost in the lower time frames. There's a thing called getting lost in the lower time frames. You're not really seeing the overall picture. And this is an example where that could really happen to you. For example, we can see that we're uptrending, yes, but then this is our most recent higher low point within the market. If I then drag this across, you can see how a lot of people would be thinking that this is a shift in market structure, okay? Because we've had this strong impulse to the downside, which has broken this level of support, and then price has pulled back up to retest previous support as an area of resistance, and then most people would be looking for the continuation back down. And this is what I mean by getting lost in the lower time frames. But we have to remember, this is the 5-minute time frame. If we jump up to the 15, we are still bullish. We're still moving to the upside. The only way we should really be looking for sell positions is if the bearish market structure continues, not on the first market structural break. This is the first market structural break, and it happens many, many times, but it doesn't mean the overall sentiment or the trend of the market has changed. It's just short term for a longer term uptrend. And when I say longer term, it's only the 15-minute time frame. So anyway, I was using that to my understanding that a lot of people, a lot of retail traders might be enticed to enter sell positions. And going off the theory, if 99% of people are losing money in the industry, you need to be doing what 99% of people are not doing. You need to put yourself in the shoe of what most people would see and then do the opposite, basically. So if you feel like it's very, very obvious that people would be selling there, I wouldn't be selling there, because most people aren't going to be right. In this market and being a trader, it's actually a good thing to be unique. It's a good thing to be different, because different means you're not following the crowd. You're not being in that 99% of traders who fail. So yeah, just a little bit of advice for you there. 5-minute time frame again. So what I was looking for, I can get rid of this now. We can see, if I just drag out a little bit on this, we can see where price, rather than dipping into this level here, we've actually found an area of support through here. Okay, We can see where we've had a nice wick rejection there and price retesting it as support to continue to the upside. Okay, so this level here has already been used as an area of support, and we can see we've pulled back down to this zone here. Now, I didn't take an entry here. However, we definitely potentially could have. It would have ended in a loss, but that's completely fine. You know, you're allowed to take losses. My strategy, anyone's strategy, you're going to lose, but if you keep finding the setups, eventually you're going to catch an amazing risk to reward ratio, and it will make up for the losses. So remember, guys, no strategy, even mine, is bulletproof. You're not going to win every single time. It's just about finding a healthy balance between your risk to reward and your win rate. Anyway, then what happened? We started to correct back down into this low, and the same thing happened again. We grabbed liquidity to the downside, and it was on this time here where I decided to take my position, because I saw it as a basic history repeating itself, grabbing liquidity to the downside, like how we have many times before in the past. Okay, so I was doing the exact same thing, and the entry was actually on the 1 minute time frame. If I go down to the 1 minute time frame, you can see where that took place. Okay, so I decided to take a buy position here. Now, in terms of my original targets, it was a lot bigger. So I was targeting this high point there. Really and truly, we should have obviously exceeded that, but we'll explain what happened as you guys saw later on down the line. So we took the entry there, and then price continued to the upside. Now, as soon as we made this nice impulse here and price had broken through this level, that's when my stop loss was trailed to break even. Okay, my stop loss has been trailed because from here we've broken market structure. We should continue moving bullish to the upside. So that's where my first position was taken and trailed to break even. Originally, I was looking for price to pull back to here for a retest, for a scaling position to then continue, but it's not always going to respect that level, especially when the market is so heavily bullish. So we'll see what happens after this. As you can see, we tried to push down, we tried to push lower. If we did come into here, I probably would have bought it, but this was not good enough of a pullback for me, so I left it. Then we continued, so on and so forth, and then I started to see that price was pulling back. Okay, so I saw another entry for a scaling position. Now, what most people are doing here is when price has made this break and we're looking for a pullback to this zone here for that continuation. After this move has been made, what a lot of people would do is they would still be waiting for price to pull back to this level before that continuation. But what we're not understanding is that price is already forming its structure. At this moment here, this was the market's opportunity to pull back to this zone. After we've had this break to the upside, that pullback to here has been invalidated because we've already formed structure and we've broken through it. So this level here becomes our new level of resistance that we're looking for price to retest to continue to the upside. So I waited for that, and as you can see, price came back down, and I took the entry and took the scale in position. And once again, once this impulsive move happened and we broke structure once again, breaking through there, I then trailed my stop loss to break even again. So now I have two positions running risk-free. So the rest now is just in the market's hand, and I'm going to be looking to trail my stop loss into profits along the way. So that could have actually been a very, very nice position to take there. See how we retested that zone? Every single time we're retesting zones. I didn't actually take a scaling position there, but definitely could have. So there's multiple times when you're in on the trend, you know, a lot of people will just take the first position and then leave it. You know, I'm actively managing, actively watching, you know, without emotions, just watching the chart, seeing how it behaves, whether I can scale in, whether I can close early. But I'm doing it not based on emotion. I'm doing it based on, you know, technicals and statistics and, you know, all this different type of things, not on emotions. So then we continued moving to the upside, nice market structure. Even again, I didn't even notice this, but are we going to retest this zone here? Let's have a look. Yeah, we just continued retesting key levels. I didn't take entries, but there's multiple times you could have taken this trade on the way up. So you'll see that I actually got out of the market here, which you saw earlier in the video. So I decided to get out just before news because we were running like about plus 20 risk to reward ratio. And for me, it was worth taking the profits before news rather than, because you guys know what news is like. You could be running all the way up here and then price can come all the way back down here in a couple seconds. And it's not worth going through all of that, having such a nice position running and not being able to take something from it. So whether that means, you know, you trail your stop loss into profit or you just close out before the news, you know, profit is not profit until it's actually realized profit, until it's actually closed and banked and withdrawn back into your bank. Even when you're trading prop firms, right? Profit that you've banked is not yours until that's back into your account. So you need to be realizing these profits as you're going along. And the first step to that is managing your position, closing out and not being greedy. Because I could have been greedy. I could have been, you know, I could have said to myself, oh, if news comes out, it might double my risk to reward ratio. You know, you can't think about that. You have to think about the risks first. So yeah, closed out. And then as you can see, news came out. And yes, as you can see, after news, price did continue moving to the upside a lot further. And I think we actually have continued even more. But it's just not worth taking the risk, guys. It's not worth losing out on that risk to reward ratio when you don't need to, essentially. So yeah, guys, that's a recap on CADJPY. I hope that was helpful, and that will now be the end of the video. I hope that was helpful. I hope you enjoyed it. Remember to leave a like and a comment in the comment section. Let me know your thoughts, any questions you might have so I can answer it in future videos. And yeah, guys, make sure you're subscribed to the channel so you don't miss any more content. But for now, I hope you all have a great rest of your week, and I will see you all in the next video.